Right then, if we stick with payroll and sticking with payroll journals and just moving forward and thinking, well, what's the sort of thing that we're going to be assessed on? Okay, what sort of things they're expecting us to be able to do? That's there. And so, compared to previously where there was like a massive long list of journals, which, okay, it's useful to know, in the assessment, they tend to be a little bit kinder and a little bit more gentle with you in terms of what you're expected to get down, okay? So let's have a little look at this and see how this works, okay? Because we've got here Hot Dogs Limited pays its employees by cheque every month and maintains a wages control account. Fair enough. Now, a summary of last month's payroll transaction is shown below. Okay, so we've got gross wages, both the employer and the employees' national insurance. We've got income tax, okay, and we've got the employee's pension. Fine, so they're the figures we've got. Now, what's kind of important to realise is obviously distinguishing between the bits of employer and employee, okay? When we're talking about income tax, remember, that's the bit that the employee will need to pay. And again, we've got a bit there, and it's the employee's pension, okay? So, fine, that's what we've got. Now, ultimately, what it asks us to do here is record the journal entries needed in the general ledger to do the following things. Record the wage expense, record revenue and customs liability, record the net wage, and record the pension liability. Now, what that means, okay, and then, sorry, just what you've also got there is select your account names from the following list. So in other words, when you come to do the journal, what's going to happen is that, when it's the account name, that's where there's the little button. You'll sort of click it, and then the drop-down list that would appear is this account name list here. So you would either be able to pick bank, employees NI, HMRC, tax, wages, pension payable, trade union, wage control, wage expense. They would be the options that would come up for you in terms of doing your account name journal. You type whatever number is in the box, and then you literally click debit or credit as to whether you think it's a debit or a credit. So that's how you're going to construct the journal. Now, the problem is that half the journals you need to do, whilst they've given us this table of data here, we're probably not going to post that figure on its own. So you are going to have to do a bit of a calculation to work out what the correct number is, as well as get the actual correct journal, okay? So let's start by having a look at these then, okay? And so part A was to record down the wages expense. Well, look. Remember, the total wages expense for the business, okay, should consist of a few things. Number one, any gross wages. Now, per the table, that is listed out as 5614. Okay, it should also include any employer's national insurance contributions, which again, from the table, is the 586. And the other thing it would include is any employer pension contributions. Now, in this particular example, there aren't any, and there may not be. Okay, obviously, it just depends on the question you get. But they're the three things we said would be the cost of the company. Okay, yes, so gross wages, employer's national insurance, employer's pension. Okay, so the point is that, right, add up the two figures we've got there, and we actually get an amount of 6,200, okay? So that is what we're going to need to post. So what we're going to do then is debit our wages expense, okay? This is the cost to the company, okay? So it would be a case of, right, debit your wages expense with 6,200. That's the cost of to the company of employing this one person or two people or three people. How many it is, we don't know, okay? That would be the cost. Now remember, the other side of the double entry basically always go to the wages control account. So on the basis I've debited an expense there, because it's the cost of the business for employing someone, the other side of the entry, obviously it has to balance at 6,200 and obviously has to be a credit. Okay, but the account name to select there would be wages control. Okay, yeah, remember just putting the other side there to wages control. So that's how I would do part A using the data we were given. Now, part B asks us to think of what is the liability to HMRC. So remember, what needs to be handed over to Revenue and Customs, okay? Well, anything that you take off the employee's gross wage that essentially belongs to HMRC. So any income tax that we deduct from employees, we have to hand over to HMRC on their behalf. Okay, so in this case, there's the income tax of 1104. If we take any national insurance contributions off our staff, okay, again, we need to hand those over to HMRC. So in this case, the employees' national insurance contributions from that table are the 535. Okay, so that's what we've deducted off the employee's wages, but don't forget, as the employer, if there's any national insurance relating to me as the employer, that also needs to be handed over to HMRC. So we do have some employers' national insurance of 586. Okay, now again, exactly the same thing. If we then go through and actually look at what that is and just take those three figures and add them up, okay, we get a total amount of 2225 there, just adding those three numbers together. Now, the whole point about this is that, look, that is a liability, okay? Because the point is, those sums of money need to be handed over to Revenue and Customs. That's who it belongs to. So, therefore, what I'm going to do is start off with like Revenue and Customs, 2225, and make that a credit balance. Why? Because that is a liability, remember. Yeah, okay, so that is the amount that is owed to HMRC. Okay, yeah, so that's a liability, so it's a credit balance of 2225. Other side of the entry, remember, always just go to wages control. Okay, yeah, so your 2225 there, debit to wages control. So that's the good thing here, is that, you know, once you've identified the bit of the entry you need, the other side is just wages control. So don't worry about wage control. Normally, if I was doing a journal, okay, I would always write the debit before the credit, okay, in real life. That might just be the accountant in me that likes a bit of neatness and order. For the purpose of the assessment, it doesn't matter which way around you do it. The computer will just mark it. So you can put the credit first, followed by the debit. That's absolutely fine. Makes no difference, okay, which way around you put those lines. In the real assessment, it's fine. And here, because the bit we're thinking about is, okay, I need to create that liability, that's why we've just whacked that bit in first and then said, hey, you know what, the other side here goes to wages control. Now, it then asks me to work out the net wages that we pay to staff. So remember, the net wages that go to staff is where you start with your gross wage and you then deduct anything that would have been taken off those staff members. So we're starting with that gross wage of 5614. We then deduct any items that need to come off. Okay, so what would we need to take off of our staff before we give them any money? Well, first of all, any tax. We're going to take the PAYE off, because we're going to take that off the staff member and hand it over to Revenue and Customs on their behalf. Any employee national insurance contributions, we're going to do exactly the same thing. We're going to take it off the staff member and then hand it over to HMRC on their behalf. So there's the 535 there. And then also any employee pension contributions. Again, we're going to deduct it off the staff member and then hand it over to Revenue and Customs on their behalf. Okay, so if we do the 5614 less 1104 less 535 less 790, the actual amount of money we get is 3185. That's how much money we will pay out to staff. The remaining bits, you know, the 1104, the 535, the 790, we're going to pay to either Revenue and Customs or the pension firm, okay? But in terms of what we need to pay to staff, it's their net wages, okay, which in this case are 3185. Okay, so because we are genuinely paying this to the staff now, that means I need to credit bank 3185. Yeah, that's the money that will leave my bank account. Okay? Now, as we said, right, that's the bit we pay out. Other side of the entry is wages control, so therefore 3185 is a debit to wages control. Okay, remember, Journal A, okay, the first one we did, already recorded down the expense of the gross wage. Okay, so the net pay we pay to an employee is effectively contained within that gross wage. So we've already recorded the expense down. That's the danger and the temptation, I think, when you get to the net wages journal is that you want to try and do an expense for it, but it's not. Remember, it's already included in as part of journal A. We've already done the debit to the expense, so this is just literally us handing the cash out to employees. Hence, we're going credit bank and debit wages control. And so then the final bit it asked us to work out, okay, part D, was to record the pension liability down, okay, so we need the pension liability. Well, look, ultimately, in terms of pension, okay, and pension liability, just remember it's employee and employer. Now, the only thing is, from the data we were given here, there was the employee pension of 790 quid. There was no employer pension part. Okay. Now, obviously, a different question. Depending on the assessment, you could have an employer part as well. Just really depends on the question. So in this case, it's only that 790 we've deducted from the employees. You may find real assessment that there is an additional amount for employer, in which case just to add it on. But the whole point is that money belongs, we need to hand it over to the pension company, okay? So as far as we're concerned, there is a liability there of 790 quid, okay? And that I now need to hand that over to this pension firm, okay? So we've got a liability there of 790. So, right, insert the pension payable of 790. What do I need to do? Well, the other side of the entry, remember, okay, just goes to wages control, which is going to leave me a £790 debit just to stick through wages control now. Let's look at a lecture example now as we're thinking about journals of payroll transactions, and we can see how this works. Now, again, it may be something that following from what we've seen already here, you may be quite happy to have a go at this, and if so, brilliant, fantastic, crack on. If not, obviously, then not a problem. You can watch me go through this and we'll see how it all works again. Okay, so let's have a look. So we've got Cool Cats Limited, pays its employees by cheque every month and maintains a wages control account. A summary of last month's payroll transaction is shown below. So we have the gross wages, we have employees' national insurance, employers' national insurance, income tax, okay, which obviously the employee will need to pay, and the trade union fees, okay, which again, we're basically looking here a situation where the employee will basically need to pay that, okay, yes, it's something that we will take off them to pay. So record the journal entries in the general ledger to do the following things. So wage expense, revenue and customs, net wages, trade union. We've got the following account name list to use, so that our account name needs to be something that appears on that list. Okay, what have we got to do? So part A, recording the wages expense. Okay, well, remember, the whole point about the wages expense is it's any gross wage plus any employer's national insurance plus any employer's pension. Okay, so that's what I'm looking to do here. Now, the idea is I'm looking to record this down as an expense. It's the cost to the company. So the account name I'm going to use is wages expense. Okay. Now, in terms of the amount, and obviously there's nowhere to put this down as such, but just looking at the figures I've got there, I've got a gross wage from that table of 3118, okay, so that's the gross wage part. I've got an employer's national insurance of 365, okay, and we've got nothing on employer's pension, so it will just be those two bits we've got to do. So in terms of a total wages expense, it's 3483. Now, the whole point is it is an expense. So because it's an expense, that needs to be a debit then. Okay, so I'm going to debit the wage expense that. So that's what I'm looking at. Gross wage plus employer's NIC plus employer's pension. There is no employer's pension here, so fine. It's just the gross wage plus the employer's NIC. Okay, So that's the bit I'm working out in terms of, right, that's what we need to do. The other side will just go to wages control. Okay, and because it's a journal, obviously it has to balance off. So it is 3483, and obviously that has to now go on the credit side. Okay, so that's what I would be doing there with part A, looking at my wages expense. So part B is the HMRC liability. Okay, well, if we think HMRC liability, what do we need to hand over to HMRC? Okay, well, any income tax needs to be handed over to them. Any employees' national insurance contributions has to be handed over to them. And any employer national insurance contributions need to be handed over to them. Okay, so that's what, as a business, we are responsible for handing over to Revenue and Customs when we employ someone. Okay, so it's any income tax, any employer national insurance, and any employer's national insurance. Okay, so the two bits there. Now, ultimately, okay, what do I need here as my account name? Okay, well, I'm going to need HR, Revenue and Customs. I've shortened that a little bit just so I can fit in some brackets to work out some numbers here, okay? But that's the account name I need. Ultimately, I need to record this down as a liability and work out how much do we need to pay Revenue and Customs. Now, using the information from the table, what have we got? Well, we've got income tax, we're told, of £904. Okay, we then have the employee national insurance to add on to that of £310, and the employer national insurance to add on of £365. So the total amount there that we're going to need to hand over to Revenue and Customs, 1579. Okay, now as we said, that is a liability. That is what you now need to hand over to HMRC. You owe that money to them. Okay, so because it's a liability, I'm going to stick that in as a credit. Okay, so that's the bit I've worked out that we need to go and do. Again, other side of the entry, remember, is just wages control. Okay, so just to make our journal obviously balance out now, wages control has to obviously be 1579, and obviously to make it balance we need it on the debit side. Okay, but that's what we're doing then to work out, okay, what needs to go to Revenue and Customs. So part C asks us to record the net wages to the employee. Okay, so net wages to the employee was part C. So to work out my net wages, I need to start off with the gross wage that they would expect. I then need to subtract from that any deductions. Okay, so any tax that is being deducted from them and given to HMRC on their behalf needs to come off. Any national insurance contributions need to be taken off as well, but remember, only the employee part. Yeah, the employer bit, the employer pays as an extra amount on top. Okay, the bit that the employee pays is the employee national insurance. And then any other deductions, such as pension contributions or such as trade union fees. So in this case, obviously we've got trade union fees. Okay, so that's what I'm doing in order to work out the amount I need to pay to my my staff here. Now, because we are genuinely working out the amount that is being paid, the entry I'm trying to sort out is what needs to go through the bank account, i.e. how much money do we actually need to pay out of the bank account to all the staff here. So what I'm going to do then is start with the gross wage of 3118. Okay, so from the table, that's the gross wage of 3118. We then need to subtract any tax. So I need to take off the 904. We then need to subtract the employee's national insurance. So I need to take off another 310. And then finally, we need to subtract any other deductions, in this case, a trade union fee of 350 quid. Sorry, £150, sorry, £150. Okay, I've written down the right number and shouted out completely the wrong one. Okay, so, yeah, so Looking at that in total, that's now 1754, okay, that we would need to be paying out. Now the point is, because we are paying it out of the bank account, we are reducing that asset of cash, okay, so therefore we will need to put a credit against the bank account as we pay the money out. Now, as we've seen already, work out what we need to do. The other side of the entry is going to go through wages control. Okay, so to make this journal balance, obviously we need to put in 1754, and that would need to then be a debit to our wages control account. Okay, so that's part C. Part D was record the trade union liability. Okay, fine. Now here, because the only thing relating to the trade union is the 150 quid we've taken off staff. Okay. Now the point is that money does not belong to us. We do need to do exactly that. We need to hand it over to them. So what I'm going to basically do is go, right, in terms of the trade union, this is basically, remember, a liability. Okay, that £150 that we've deducted from the staff, we can't keep that as a business. We need to hand it over to the union. You know, that's what we've taken it off them for, so we need to hand that over to the union, in which case it's a liability, and so therefore I need to credit that, okay, and credit that amount to them. As we've seen, the other side of the entry then needs to go to wages control. So to make this balance, obviously you need to put in an amount of 150, and then that will be sitting there as a debit. Okay, so good lecture example sort of thing, yeah, indicative of the kind of thing that very, very, very easily you could be given and asked to do in the exam, where you basically have to knock up the journals for doing payroll. Okay, so there they are. There's a bunch you may have to produce. Okay, then let's now have a look at another lecture example just to see how this works. Okay, again, so similar thing as before. You may be quite happy to look at this yourself, and if you are, fantastic, crack on. Okay, but if not, fine, watch me go through it, not an issue. So, Funny Fish Limited pays its employees by cheque every month and maintains a wages control account. A summary of last month's payroll transactions is below. So we've got our gross wages. Just note this time, in terms of pension contributions, there are both some from the employee and some from the employer. Okay, so we've got two lots of pension contributions there. There is some income tax, okay, which remember will be an employee deduction. Okay, that's the sort of thing that will come off the employees. That's an employee deduction. And then again, look, they've given us both employee and employer national insurance. Okay, and so we've got to do the journals for this. Okay, so what's the wages expense? How much we've got to pay to Revenue and Customs? What's the net wage we're going to pay out? And what's the pension liability? Okay. Ultimately, then again, we've got our pick list, okay, of everything that's there. So our account names need to be one of those. What do we got? So first of all, part A, record the gross wages, okay? So remember, when we're dealing with, record the wage expense, I do apologise. So when we're dealing with the wage expense, remember, that is the gross wages that we are going to pay the staff, okay? That forms part of the total expense or total cost of the company. We then need to add on any employer national insurance contributions, okay? Because that's like an extra cost of employing someone if there is then employer national insurance contributions to make. And the other thing is if there's any employer pension, because again, that is an extra cost to pay on top, and so it's an additional cost of employing someone. So they're the things we're looking at in terms of a wages expense. So in terms of what am I trying to do? Well, my account name needs to be wages expense. That's the whole point. That's what I'm trying to work out here. So then using the data in the table, okay, I've got a gross wage of 12,472. I need to add on the employer's national insurance bit of 1,460. And then I need to add on the employer pension of £900, okay? So if I total that lot up, the total cost of employing someone is 14,832, or all staff in this case for this period is 14,832. So that's the wages expense plus the employer national insurance employer pension. Now the point is, this is the expense, this is the cost to the company, so therefore that should be a debit. Following our dead click, that is a debit. What do we do? Well, remember, other side of the entry then just goes to wages control. Okay, so obviously it's got to be the same number. It's 14,832, and it then needs to be the opposite entry. Okay, so we need to do a credit entry for our wages expense, and so great, we've done that one. Okay, so that's our wages expense first of all. Now, the second thing it asked me to do in part B then is record HMRC liability. So what is it that we need to hand over to HMRC? Okay, well, what do we need to hand over to HMRC? Any income tax that we have deducted from staff, we need to hand that over to HMRC because we've taken it off them on the promise we'll hand it over on their behalf. Any employee national insurance contributions, again, we've deducted it from somebody's pay, okay, which is why the net pay is lower, so we've taken it off the staff member. So again, we now need to hand that over to Revenue and Customs, so we need to add the employee bit on. But then also the employer part, okay? So in terms of national insurance, yes, there's the employer part as well, which we also need to hand across. Now, in terms of what is it I'm trying to do, well, look, this doesn't belong to us, okay? Fundamentally, these are the sums of money that we now need to hand over to HMRC, okay? So I'm just going to abbreviate to HMRC, but it is that HM Revenue and Customs, okay? Yeah, that's the bit I'd be recording down now, okay? So that's what I would select off my drop-down menu, okay, for this HMRC. Now, looking at the amounts that are involved there, okay, we've got the tax of 3616. We've got the employee national insurance contributions there, okay, of 1240. And we've got the employer national insurance of 1460. Okay, so adding that lot up, we get 6316. Now, what is this? Well, remember, this is the liability. This is the amount of money that we need to pay and hand over to Revenue and Customs. Okay, so therefore, as this is a liability, we need to record that down as a credit. Okay, yeah, that's what we now owe Revenue and Customs. It's a liability, therefore it's a credit. Okay. Other side of the entry, hopefully as we're getting familiar with now, goes to wages control. So it obviously has to be the same number, and therefore that needs to go on the debit side, okay, just to make sure the journal does in fact balance off. Okay, so that was part B, and our bit that we've done to Revenue and Customs. Okay, so we can tick that off, we've done that. Next, the net wages paid to the employee. Okay, so that's what I've got to work out is the next in part C, is the net wage paid to the employee. Now remember, to work out net wage, okay, we start with what somebody's gross wage is, and then we take off any deductions. Okay, so deductions that would be taken off an employee. Number one, you would subtract any income tax. Okay, fine, take that off them and hand it to HMRC. We also need to take off the employee any national insurance contributions, so the employee national insurance contributions, we're going to take that off them and again hand it over to HMRC. But we're also going to take off any employee pension parts, okay, because we're going to take it off the employee, okay, and this time we're going to hand it over to the pension company. So in terms of me working out what the employees get, it's their gross wage less any amounts we've deducted from them. Now, because this is net pay or net wages, this is genuinely what I am going to pay out to them. So the entry I need to make in my journal is to bank. Okay, yeah, it's the bank that we're needing to touch here. So again, using the figures we're given there, we're going to start with that gross wage of 12,472. That's the gross wages. It's then a case of deducting the various things. Okay, so we need to take off that income tax of 3616 because we're not giving that to the employees. That's going to HMRC. we need to take off the employee national insurance contributions there. So we need to take off the 1240 because, again, that is going to HMRC. That's not going to the employee. And then we also need to take off the employee pension contribution, okay, and so there's the 600 quid to take off because, again, that's not going to the employee, that is going to go to the pension company. So therefore the total amount we're actually going to pay out of the bank account here is £7,016, okay. Yeah, that's the total amount that needs to be paid out to the employees. Now, the whole point is because we are genuinely paying that out, that needs to be a credit to the bank account. Okay, yeah, so we need to credit bank because that's what's coming out of the bank account then, okay, and that's what we're going to pay to them. So there's the credit there. Hopefully getting dead familiar with this now, okay, but the other side of the entry then just goes to wages control. So it has to be the same figure. Obviously 7016, and to make sure the journal balances, I would need to debit wages control. Okay, but that's what we're doing with the net wages, is we're paying them out of the bank account. So that's what we're working out. Okay, so that was part C. So net wages done. So the last thing here just to work out was what's the actual pension liability, okay? So we've got to work out the pension liability. Well, if we think, what is it that we need to hand over to the pension company? Well, any amounts we've deducted from employees and said we're going to give that to the pension company, we need to hand over. But also, if there are any additional amounts as the employer we've said we're going to pay out, well, we need to hand those over as well. So we've got both the employee and employer bits to hand over here, okay? So in terms of what am I going to select? Well, look, because I owe this to the pension company, it is a payable. Yeah, we this is a sum of money that we've said we're going to hand over to them, but we've not yet done so. So we need to record down a pension payable. Now, looking at the figures we've got the employee element of 600 and we've got the employer element of 900. Okay, so they're the two sums that we have for employee and employer contributions, which means there's a total of £1,500 that needs to be handed over to the pension company. Okay, because it's a payable, because this is a liability, that very much needs to go onto the credit side. Okay, so it does, and it's a credit because it's a payable and a liability. So that's what I'm going to record down. And again, hopefully familiar now. Other side of the entry goes to wages control. Okay, so there's the £1,500 to make the journal work. And obviously, if we've already recorded down a credit, we now need a debit to make that work. Okay. So, look, make sure you're familiar with this and familiar with payroll journals because, realistically in the assessment, you're going to have to do something around payroll and payroll journals, okay? So, this is the kind of thing that will be coming up consistently within the assessment.